except for retail sales, and except for the foreclosures, and house prices, and incomes, and consumer prices, and business profits.
Value of the dollar.
At least stocks are doing well, right? The Dow rose again yesterday. In terms of time, it's already beat the bounce of 1930. It's in its 6th month. In terms of stock prices, it's still a laggard, however. U.S. stocks are up about 45% from their low of 65.47 on the Dow. By that measure, the current reading falls a little short of the 50% increase registered 5 months after the 29 low. And now comes news the economy is not recovering as planned. Even with the cash for clunkers retail sales fall, reports the New York Times, retail sales were expected to go up in July. Instead, they went down. Bummer. Economists also expected unemployment numbers to go down. Instead, they went up in July. And last week, 558,000 people applied for unemployment benefits, up from the week before. That brings a total to 6.7 million jobs lost since the downturn began in December '07. Oh, what's this? Foreclosures hit another record high in July, making the 3rd new record in the last 5 months. You can prove anything if you torture the numbers enough, but if you need a job or need to sell your house or refinance your mortgage, well, good luck to you. Since 1945, the U.S. economy and much of the rest of the world's economy has been carried on the backs of the American consumer. First, they spend money they earned during the war years. Then, they spend money they earned in the boom of the 50s and 60s. And then they spend money they hadn't earned at all. They borrowed from future earnings, increased total U.S. debt from just 120% of GDP in the 70s to a staggering 370% of GDP in 2007. In the last 15 years of that period especially, each time the consumers showed a reluctance to continue spending, the feds rushed in to give him more credit. And during the final 5 years, debt nearly doubled. Now the consumer is dug in his heels. He's not going a step further until he unloads this excess baggage of debt. Once again, the feds are trying to stimulate him. The Fed's key interest rate is practically zero. The feds are pumping money into the economy as fast as they can, and they'll give a follow-up of $4,500 if he'll agree to kill his old car. Even with the stimulus spending, the stimulating low interest rates, he's still not willing to add debt. Of course, this is just what's happened in Japan. The public sector spent, the private sector saved, and that result an on-again, off-again recession that's lasted more than 20 years. Encouraging people to buy too much was what caused this problem in the first place. Encouraging them to buy more now is not a solution. It's just a continuation of the same flawed policy of stimulating consumer demand, a policy that has been in place for decades. But now the wind is blowing in the other direction. The government may not like it, but they can't stop it.
Well, that's 100% correct. I mean, they're not proposing that we save, that we spend to reinflate the bubble. This cash for clunkers, if they sell a whole bunch of cars this month because of that, then won't that level itself out or self-adjust itself, and then the next couple of months will be slow? I mean, you're really not benefiting. Plus, I think, like David and some of the others that have called in have said, getting rid of all of those cars, forcing them to be crushed, I mean, it just makes no sense. And there's been studies, like we've said here before, it uses more fuel to manufacture the new car, destroy the old car, than if they just drove the old car the whole time. Plus, getting in debt in this economy on a new car, unless you're upper middle class or the rich, who can afford it?
If we're so eco-conscious in this country, at least we're pretending to be, I mean, look at the pollution producing a new vehicle produces. I mean, it's staggering. Yeah. We've already produced the pollution in the old car.
Yeah, I agree with you.
This is from LouRockwell.com, Bill Sardi. Days away from economic crisis. America's just a few days away from the possible day of reckoning. On August 25th, the Federal Deposit Insurance Corporation issues its second quarter report for 2009 on the state of the health of American banks. It has not particularly alarmed Americans that the growth and prosperity have been built upon debt. The American public is a bit desensitized, particularly since the Y2K threat fizzled. We must wait and see how Americans respond to this upcoming report. There are roughly 8,400 American banks that set aside a small portion of their profits to insure bank depositors should their local bank fail. A plethora of bank failures have depleted the FDIC reserve fund from $58 billion in 2008 to $13 billion in the first quarter of 2009. Alison Beshkin, writing for Bloomberg, indicates the failure of 77 banks this year is draining the fund, prompting the agency in May to set an emergency fee of 5 cents for every $100 in assets, excluding Tier 1 capital, to raise $5.6 billion in the second quarter. Hiding losses. Banks have been slow to foreclose, allowing mortgage holders a few months before their home is deemed in default and giving another 2 years before the property is foreclosed on in its accounting books. This practice has been able to temporarily hide most of the banking collapse. But banks must eventually write down their real estate home mortgage losses. First quarter net charge-offs of $37.8 billion were slightly lower than the $38.5 billion in the industry charge-offs in the fourth quarter of 2008. As banks write off bad home loans, this downsizes their asset values. Downsizing at a few large banks caused $302 billion decline in industry assets in just the first quarter, the FDIC report says. The mother of all bank runs. Now, if just a small portion of American depositors hear that the FDIC had to tap into U.S. Treasury for funds, and these depositors feel their bank money is at risk and want to withdraw some of it, the mother of all bank runs could ensue. This could create a day of reckoning that many have predicted. A short banking holiday would have to be declared, and who knows what happens from there. Troops in the streets, issuance of a new currency, martial law.
I tell you, that brings up something interesting, because when FDR passed the Emergency Banking Act and started the bank holidays, those people were taking certificates back and wanting their gold, which of course had been robbed and looted. Now today, if we wanted to go get our money, of course we're getting just fiat paper worthless, and they're printing it out at record amounts. So I wonder if the banks would really refuse to give us the worthless paper that we want, and that's being devalued as we speak. But Bob Chapman says it's coming, so it seems like it might well be on the horizon. When we come back after this next break, we're going to give out the phone number, take phone calls the rest of this hour, because this is what this broadcast is for, so that the listeners can get involved. Also, at LibertyNewsRadio.com, all the archives are free now. You can listen to this show, all the past shows, or any of their other broadcasts they carry, and they also have a call-in number that you can listen over the phone if you're traveling, you'd like to listen live to Liberty News Radio. That number is 801-769-2970. I'll give it out again, 801-769-2970. And also, LibertyNewsRadio.com is a great source of news and information that you won't see in the mainstream puppet press. I'll go ahead and give out our phone number. If you'd like to call in when we come back after the break, it's 1-866-986-6397. I'll give that number out again after a word from our sponsors. All right, we are back on the Real News Radio, your weekly broadcast where we sort through the disinformation, falsehoods, lies, and propaganda of the mainstream puppet press. You're here on the Real News with Farron and Brian, and we're going to go ahead and give out the phone number. We'd like for the listeners to call in and tell us what you think of the events that's transpiring in this country today. And the number is 1-866-986-6397. If you'd like to call in, whatever's on your mind, 1-866-986-6397. And Brian, this kind of goes along with what you were saying on the economy, and this was reported this past week, Monday the 17th, by the Miami Herald. 47% of South Florida homeowners underwater on mortgages. That's a staggering amount. The article goes on to say, as home values continue to show declines compared to a year ago, the percentage of South Florida homeowners underwater in their mortgages